the market is pretty excited, you know, with many stocks and indices hitting historic highs. Pretty remarkable rise on Friday. If you ask me, we have the S&P, 500 pretty much hitting record highs. We just, tapped the 53.25 level right over there. Same thing with the Dow Jones US30. We are trading over 40,000. For a brief moment, you can see that we passed the 40,000 level. Right now, it's just slightly below it, but obviously it's also cheering for Nasdaq. I did discuss that in the previous video. You can see that it is record high upon record high on all the major stocks and indices that we are actually interested in trading. Also take a look at gold. Obviously it did close at an all-time closing high. Look at that. This is an all-time closing high, right? It's not the highest point that it has ever closed, because it went with a wick right over there, rejected and closed at this zone, and then wicked up again, closed at this zone. But right now it wicked up and it did closed at the top. So that's an all-time closing high that we have on gold. So trust me, the market is pretty excited and it's about to be a really good week. I do see a lot of you guys' requests me to analyze Nasdaq alongside gold, maybe, one of the Forex pairs and stuff like that. But in this video, I'm just going to analyze Nasdaq, US30 and gold for this particular week. And the S&P 500, it normally moves the same as the way Nasdaq does. And if you just get the idea of the analysis, it's going to be one and the same thing, right? So before we get into the weekly analysis, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You know what's up. Don't forget to hit the like button, turn your post notifications and subscribe to the channel, because when we hit 10,000 subscribers, I'm going to be doing a lit giveaway, finding 10 different accounts and giving 10 different people free membership, right? You don't want to miss that. So trust me when I say that we are about to have a really beautiful week, because these charts are looking absolutely amazing. So let's just hop onto the charts. And obviously, the first thing that we're actually going to do is to check if we do have news, right? It's nothing too crazy. As you can see today, this is where we have Mr. Powell speaking. That's going to be at 10:30, and probably he's going to make the market open with crazy gaps and stuff like that, but that's nothing too crazy. If we just stick to analysis, we'll be good. And then on Wednesday we do have FOMC, as you can see right over there. It's going to be late at night, so we would have traded, but then nothing too crazy. PMI on Thursday, and then Friday the market is pretty decent this week. So let's just go on to our Nasdaq chart. And I really think that you guys already know what is happening in the market, right? If you just look on our daily time frame right over here, we are at the record highs, right? So we went to 18, that was 18, almost 18,700 right over there. Oh, 700 is a drag, but then 18,680 thereabouts, and that was all-time high for Nasdaq, and then it did kind of retest a little bit. So we're really not focused on the bottom part of Nasdaq for this current week, because we want to see what the market is doing right after it has broken the all-time highs, right? So obviously that we're going to take our horizontal ray to mark it up the high that it broke. And just by looking at this chart, you can already see that the market kind of retested that thing. It has broken out and has come back for a retest. There are two types of techniques to actually trade breakouts, right? You can trade the breakout with the impulsive entry type of move, whereby it just breaks out and then you go on to a lower time frame to look for more confirmation if it has closed outside of the break, and then just enter without a retest. And then we have the second one, where you let it break out, you leave it. This is like leaving the market for a day and a next day, for a day, and then the next day, and then this day that it has come out, the third day, you're actually still waiting. You have to wait for the market to close. So if it closes as a rejection, you'll still wait for it to form a next candle here, for a confirmation candle to tell you that it has really rejected. Because if you just enter right now, it hasn't rejected, it might come back down, or you go on lower time frames to confirm the trade, right? So that is what I'm saying on Nasdaq. You can see that it has tapped on our breakout, so it has broken out and then it has come back to retest this zone, but we really don't know if it is a retest because it hasn't closed outside. We can only know that if we go onto our lower time frame. And on our 4 hours, it's still telling us that it didn't come to the zone. It hasn't closed. Well, it has closed. We're going to see how this candlestick opens. So with Mr. Powell speaking today, we don't know if he will open with a gap right over here or he'll open with a gap right over there. You know, we'll just have to now see how the market opens for us to be able to make an entry, right? So what we are saying right now on Nasdaq, we are bullish. You know, we have broken all-time record highs, and because of that, it doesn't mean the market is ready to reverse. As you know, I'm always preaching that. So we obviously know that we're going to be looking for buying positions, and we can see that we have a lot of bank zones right over here. So the only thing is you now have to know which ones are the most accurate and which ones will be the most useful bank zones that we have. So just like how we normally analyze, we'll just have to wait. If we try and use a trend line right over here, yeah, this is a rough trend line, but before the market rejects at this zone and then comes back for us to then look for buying positions, yeah, that would be like, you know, long, right? So we can try and draw using this one, this particular trend right over there. So you can see that the market, since I'm using wicks right over here, I might as well use this as the week right over there, so that it kind of like says like this, right? So it's self-explanatory, right? So obviously you know that when we are looking for buying positions, we don't want to look for them using the trend lines. The trend lines, we only use it for selling positions, right? For buying positions, we have to wait for it to break the all-time high again. The only difficult thing of trading this type of setup is we don't know where to put our take profit, right? We don't know where the market is going to get to after it breaks again this zone, right? So that's what we're saying. So basically for our buying positions, we're going to be looking at it breaking this zone, and then we're looking at price action at this zone on higher time frames, right, for buying positions. So if we have good price action, the pin bars, the bullish engulfings, the normal ones that I'm always telling you guys, we'll definitely go in for the buys. Or if you miss it, you have to wait for the break off this zone, and then we go in for the buys. The only thing is we now don't know where it will ride to, and then this is where the Fibonacci extension tool comes into play. You just have to take out your Fibonacci, measure the retracement, and then you get a rough idea of how it's actually going to move to the top, right? And then for selling positions, obviously, if it fails to reject at this zone, if it fails to reject, breaks out of the trend line, you know, and then it fails to also break out of these zones, then we obviously know that we're going to be looking for selling positions. But then selling positions, you really have to be careful, because you don't want to be selling when the market is railing up to the top, right? We always want to be careful in this type of market, especially this particular week where we just have, you know, record highs on all the charts, right? So the market might come back to this zone and then reject at this bank zone, or reject at this particular bank zone. You really don't know when it's going to just reverse and go back to the top, right? So these technical analysis normally don't hold when the market is on when it's sitting at all-time highs, right? So that's basically decent for us on Nasdaq. Nothing too crazy, you know. We're going to be just that looks really nice on the 1 hour time frame. You know, if we're talking about price action, you can already see that we have that pin bar candle right over there. We just have to now wait for the market to open and see what we have. So we can even say if it breaks these zones, we can ride it up to the top. So we're going to be extremely careful on this market. So let's go on to our US30 chart. So it's basically one and the same thing. US30 is indeed at the top, right? So basically we are just saying for our buying positions, we have to wait for it to break these zones, and then if it does, yes, of course, we're going to go in for our buying positions, or for it to come back to the zone, right? If it comes back to the zone, fails to break out of the zone, then we're going to go in for using this bank zone right over here. And then obviously on this chart, you can do the trend lines also. You know, the trend lines are most welcome right over here. It's going to be pretty simple. You see, the market is not complicated this week because we're just trading all-time highs, right? So the only reason why it might fail to break out is because of this zone. So let's see how it can hold that. But since it has already closed with, you know, this type of candlestick, we still do just have to wait, always wait for confirmation, right? And then if we go on to our gold chart, one and the same thing, kind of looks like gold is kind of rejecting though. But like I explained at the beginning of the video, it did close. We have an all-time high close on gold, right? So normally it was just wicking up to the top and then it wasn't closing. But then this particular week, it wicked up and then it did close. You see, this is the all-time high close on gold. But then we should still remember that we do have a wick right over there, which can cause it to reject. You know, it can go back to that zone and try and play around. Don't be deceived if you're seeing these little candlesticks right over here, bullish, bearish candlesticks like that. The market doesn't just start reversing just like that. You have to see a really good clear formation of a retest, right, of a rejection, right? So you go in for the sells, right? So if we're just using basic price action for gold, if it rejects at the zone, we want to sell it as it comes to the bottom zone right over there, because that will now be a liquidity zone, because gold normally doesn't just, you know, push up or push down. It likes to play around for a little bit and then just drop or just goes back up to the top. Obviously you can still then find the trend line. That's pretty simple. And for the S&P 500, basically one and the same thing for Nasdaq. If you go onto the 1 hour time frame, it basically just moves exactly as Nasdaq does. So the analysis is pretty straightforward for this particular week. And always remember to use proper risk management. Don't try and make 1 million with one single trade, right? You always want to use risk management, because risk management in trading is the key factor to success, right? If you did enjoy that video though, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'm out. Peace.